Good morning, Lagos. Good morning, everyone. This is Follow the Money, brought to you by Nairametrics. My name is Ugodre, and we do this every Monday, 8 to 8:30 on the station. If you are just tuning in to this program for the first time, you can always get previous recordings on any podcast platform. Just go to Nairametrics on your podcast platform, and then you would easily find this show recorded. All right, so on today's Follow the Money, we've got a number of results that I want to discuss today, as usual, following from last week. So if you're a shareholder in some of these companies, you might want to pay attention to some of the stocks that I'm going to talk about. There's one that is actually exciting me right now. That stock, that company did pretty well last week. Their results were quite impressive, and it's looking like that stock might just be on my radar. I've also got a few other stocks on my radar, so you want to pay attention to those stocks. But before we start, let us go into the performance last week. Last week was one of those weeks where we opened Monday last week. Crazy. I'm sure you all remember when the markets were, it was as if the markets were in turmoil, as if we were back into another, the world was scared that we're probably going to get into a recession. I think at the end of the day, they dubbed it Panic Monday, and all those fears never really materialized. I kind of said it last week that, look, I think people were just panicking. And, of course, markets closed even stronger last week than the week before. Nevertheless, there's still fear out there that there could be, maybe a lot of stocks are overvalued. I think that's just the fear. So, or maybe it was just pure correction. Markets were just correcting, especially in Europe and the West, where their stock market are often bellwether for what the economy might look like in the coming months and years. So, but the NGX closed also positively last week, even though at the start it looked like it wasn't going to close positively, but it closed 0.87% the week. So month to date, 0.84%. This quarter, we're still down 1.46%. But year to date, stock market still flying at 31.85% year to date return, just slightly below the current monthly inflation rate. But in terms of average inflation rate, doing a lot better. So stocks are giving investors a better return for their money at the moment. Top on the charts last week was Oando. I'm going to speak a little bit about Oando today. Shares gained 60 whopping percent last week. Incredible stuff. We also have RT Briscoe, Japol, Academy Press, United Capital, one of my favorite companies as well. Always also there, up 31% last week. You do remember I mentioned this company some weeks ago that they declared bonus shares. So investors still loving what they see here. Nigerian Breweries also staged interesting comeback last week, gained 19%. Just 1 week. Share price was almost at a low at 26 naira after they declared losses in the second quarter. But investors seem to maybe like the trajectory of the company at the moment. So share price is up 19%. You might want to pay attention to that stock, by the way. Another interesting one that I saw here is Mikio. Mikio, the healthcare company, also gained almost 16% last week. So, three interesting stocks here that you probably want to pay attention to. Oando, of course, Nigeria Breweries, and Mikio. I'll speak to Oando much later on the show. In terms of decliners, we do have decliners as well. Champions Breweries lost 15%. Boa Cement also lost 10%. If you want to know my Champion Brewery story, it was a lesson for me for a long time, but I don't want to get into that. That stock just gives me nightmares. University Press was also there, lost 10%. AXA Mansard, interestingly, lost 6.8% last week to close at 5 naira, just above 5 naira. Fitsin Healthcare also lost 6.7% to close at 13 naira 75 kobo. So those were the major losers last week. And of course, if you are shareholders of this company, they also paid dividend, or they closed their register for dividend last week. So if you didn't buy these shares, you're not going to get dividend, unfortunately. Transcorp Power, also one of my favorite companies out there, closed at 3 naira 73.90 kobo. That's also because they are paying dividend of 1 naira 50 kobo interim dividend to their shareholders. So that adjusted their share price to 3.72.4 kobo. Still within the Transcorp family as well. This guy seems to be on fire, man. Paying dividend. Like Transcorp Hotel also paying 10 kobo dividend. Share price closed at 98.4. But if you adjust for that dividend, it goes to 98.3 naira per share. That's the ex-dividend price. So if you're a shareholder of Transcorp Power and Transcorp Hotel, you should be expecting those dividends in your bank account. You should be expecting that a lot. Just multiply this dividend I just mentioned now by the number of shares you have, and that gives you an idea of what you might be getting. Of course, you got to adjust it for withholding tax. Yes, another of the Transcorp family, the main Transcorp group itself, Transnational Corporation. Also, it's not, following in line with his subsidiaries, also paying dividend. Transnational Corporation is paying 10 naira dividend, 10 kobo dividend, I beg your pardon. So share price adjusted for that is 10 naira, 30 kobo. So in total, the Transcorp family is going to be paying 1 naira 70 kobo per share. I mean, it reminds me of, I guess, the reason why they said they were unbundling Transcorp into, Transcorp Power and Hotel and all that. So I think at the time they had said that would allow investors have better value. So imagine if it was just Transnational Corporation, maybe they probably wouldn't have paid all this dividend. But now that is unbundled, you can see that each of these companies are on their own and giving shareholders some kind of value. So you're getting dividend paid, all three. I've always been for unbundling sometimes. I think sometimes that when a company is too composite, it's always often difficult to get value out of them, or in terms of performance. And so good that we're seeing this dividend. And these are interim dividend, by the way. So imagine what full year dividend could look like. So good times for shareholders of Transcorp, Transcorp Group itself, whether you're in the Power Hotel or a Transnational Corporation. Okomo Oil PLC, one of my faves, that's one of my faves there. They also declared dividend of 8 naira per share. So if you're a shareholder of Okomo Oil, you're going to be getting 8 naira per share. I've been a shareholder for years, man, so looking forward to that dividend. All right, so that's basically a roundup for stocks last week. Which of the stocks caught your attention? Anyone that maybe you like? Anyone that you own? All right, so we'll quickly go into results. Yeah, so the number of results out last week. I just want to focus on 3 that caught our attention. 2 of those companies are from the Boa Group. Boa Group is also one of those conglomerates on the exchange that also has a number of companies listed as subsidiary of the main Boa Group. So kind of like Transcorp as well, or kind of like Dangote Group. So you have Boa Food, Boa Cement out there. So if you've never heard of that stock, that's also one of the stocks worth over 1 trillion. Both companies belong to that elite group of Nigerian stocks that are worth over 8 trillion naira in market valuation. I think there are like 8 or 9 of them or so. You might want to check Nairametrics for the rest of the stocks that are in that group. And Boa Food released their numbers last week. Revenue was up for the quarter. Quarter means April to June. April to June alone, this company's revenue grew 79% to 315 billion. Incredible stuff out there. Of course, cost of sale also rose. Of course, not easy. Cost is up. So companies are facing a lot of pressure. So cost of sale rose 106% to 210.5 billion year-on-year. Nevertheless, gross profit was also up 41% to 105 billion. And of course, my favorite number out there, operating profit up 51% this quarter or the last quarter in view to 99.5 billion. That's just some strong numbers out there. Operating margin, and that's how much profit the company was able to keep from its revenues, was 32%. So strong results for Boa. And I kind of dug in to find out what were the major drivers for Boa in this result. And the company did explain that a lot of, let's even try and read that out. According to them, they did mention that they had issues with inflation and cost of goods and services. Nevertheless, the company still did pretty well in terms of their revenues. So revenues was due to an 88% increase in sugar sales. Sugar sales went up to 369.7 billion. Of course, they also had a 164% increase in flour sales as well to 227.9 billion. Of course, 95% in pasta sales. So all around, appears the company did pretty good for the quarter. Interesting numbers, and interesting that they also face cost pressures, but nevertheless, they were able to manage a lot of this. The sugar division for Boa Foods contributed 55% to revenue in the first half of the year. So sugar is a significant driver of the company's numbers. But what is more interesting is the real reason why revenue went up, because they did mention that volumes dropped. Volumes decreased by 14% to 294.9 thousand tons. So suggesting that perhaps price adjustment played a key role. But for their flour mills, what is interesting is that the flour mills numbers was driven mostly by volume increase and price adjustments as well. So that's interesting because flour mills contributes 34% of Boa Foods revenue. So what that kind of tells me is that people are still spending a lot on food. Food that is very, flour mills is a huge portion of what we all eat in Nigeria. So people seem to be spending a lot on food. Then, because if you look at their pasta division, which contributes 11% to revenue, pasta division saw a 7% increase in volume as well, because it appears people, seem to eat a bit more pasta. And of course, even for rice division, there was also a 46% increase in production volume. And of course, revenue from the rice division was up 182%. So it gives you a kind of idea of how food companies are performing. It appears as much as the economy is hard hitting, companies that are into food processing, food manufacturing, seem to be finding a way out of all these issues. So yes, it's one thing for them to adjust prices, but you're also seeing volume move, which means they're spending a lot on effective distribution of their products. All right, so that is for Boa Foods. Interesting numbers there. So if you're a shareholder of Boa Foods, you should be happy with some of the things that we've seen in terms of their numbers. But what about a share price? Share price closed at about 379.9 naira. In terms of price earnings ratio, Boa Foods is at 46 times earnings. It's trading at 46 times earnings. One of the most expensive stocks out there. Appears maybe shareholders kind of, prefer give it a lot of value in terms of what they are doing. Now we go to the next stock before we go on a short break. Boa Cement, also part of the Boa family. Boa Cement, major competitor in the cement industry, I think the second largest cement company in the country, did revenues of 202 billion. This is in 3 months, 202 billion, 76.8% up. So as much as things are pretty tight in the country, these guys are minting money, minting real cash here. Of course, gross profit 64 billion, up 15%. Pre-tax profit 18 billion, down 54%. So for Boa Food, the results were a little bit concerning to investors. Of course, that's because of cost pressures. So even though you saw increase in revenue due to price adjustments, cement companies are still struggling with huge cost, especially input cost, power-related cost. And so that is one of the major reasons why it appears that Boa Foods results, dropped 54% compared to the year before for the last quarter in view. Of course, their share price is at 128.9 naira, per share. Price earnings ratio at 121 times earnings, also quite expensive. But I think this is one of the lowest, prices that we've seen Boa in a while. I think the last time Boa was anywhere close to this was perhaps sometime earlier in the year. Was when Boa was around this sort of levels. So we're looking at like a year-to-date low for Boa at the moment. So pretty interesting what is going on. So you might want to look at the stock because Boa is one of those stocks that tend to give shareholders significant value in terms of returns. But at 128 naira, that's the lowest and that have seen the stock perform in a while. So it's always done a lot better than this. So could this be an opportunity? Perhaps maybe let's remember that BUA at one point was at almost 188 or 185 naira per share sometime earlier in the year when stocks were flying. So there could be an upside here. All right, so that is it for the first half of the show. In the second half, I'm going to be coming back with more stocks. Pay attention to UAC Nigeria. That's going to be the next stock I'm going to be talking about. All right, we're back like we never left. So we have UAC Nigeria. Just a little bit of backdrop. This is one company that has going through some kind of restructuring over the last few years after a major acquisition some years ago. So it's really taking some time. They have fresh, new, young management in there. And these guys seem to be doing some kind of magic around there. And last quarter's numbers were quite impressive from what I see. Let me just dive right into it. Revenue was up 57% to 83 billion. UAC, by the way, is a conglomerate as well, and they're into several businesses, which I will get to at some point. Gross profit also up more than double, 117% year on year to 18.7 billion. And of course, one that was even crazier was operating profit, up by over 1,000% to 6.7 billion. Pre-tax profit 15 billion because they made huge gains on finance income. So impressive numbers there from UAC. And I tried to dig deep to find out what was really the driver here for UAC. Why did they do that well? And digging into their numbers, they did mention that there were a lot of restructuring that they did that helped during the year, and or doing. But I mean, for some time now, that seems to be paying off for them. They did also mention that, of course, they have experienced the same kind of pressure that a lot of companies have experienced because of inflation. Nevertheless, their CEO, let's even mention what their group managing director, Fola Simoji, said. He said in the second quarter of 2024, group revenues and operating profit grew 51% and 390% to 43 billion and 3.3 billion respectively. This performance was achieved against a backdrop of challenging operating conditions, including record high inflation impacting input and operating expenses. I think I mentioned that already. But they navigated margin pressure by balancing growing revenue, growing volumes, I beg your pardon, profitably with a disciplined approach to pricing, as well as implementing efficiency initiatives across our segment. So these are big grammar, but let me just break it down. So when they tell you that, but the balance growing volumes profitably with a disciplined approach to pricing, essentially they're saying, look, they adjusted their prices, but in a very competitive manner, and that sort of helped drive volumes. Because, there's a way you can push volumes, and that could impact prices. So they've got to have a very good balance in between that. And then they also said they implemented efficiency initiative. That's basically cutting costs across board. So they may have been a lot of painful cost cutting that could have been the reason for the sort of numbers you're seeing. So interesting breakdown there from the company. So I try to look as well into the key drivers. And from what I'm seeing here in the Q2, of course, revenue increased 51% for 2 billion due to sales growth, according to them, in all their segments except for their QSR. QSR is their quick service restaurant like Mr. Biggs, which didn't really do that well. However, their packaged food and beverages was up 129%. Edibles and feed up 28%, and paints up 22% as well. So strong numbers there from UAC, edibles and feed. Just to give you further breakdown, from edibles and feed, they made 19.8 billion. Paint business made 7 billion, up 59 percent. Sorry, 22.4% quarter on quarter. That's last quarter of second quarter of last year versus second quarter of this year. Packaged food and beverages also did pretty well. So interesting, performance there for UAC. So what happened to their share price after this? Share price was up slightly by 3.86%. And I always said that investors in the stock market tend to always look at it different. But share price is currently at 17.5 naira per share. That automatically puts the stocks on my radar. Price to earnings ratio at 3 times, so that's pretty cheap. So you guys want to pay a lot of attention to this stock, because it looks like at the end of the year their numbers are probably going to do well. By the way, share price for UAC over the last 1 year has been between 9 naira 50 kobo and 18 naira. So basically this stock share price has doubled in the last year alone. So interesting numbers, and they're backing this up by solid performances as well. Finally, on results, I want to quickly go into Tantalizers. Tantalizers still struggling a lot. Revenue down 51% to 559 million. I'm sure you all know Tantalizers. As much as they're still minting revenue, but revenue is down. It's been going down for a while now. Pre-tax loss at 164 million. Struggling. I kind of think that Tantalizers might just be a target for an acquisition at some point. It's about time they probably look into that direction or look at merging, because they are suffering in terms of top line reduction in revenue. They also seem to be having some kind of financial constraints with their balance sheet. So it's either these guys look for some kind of capital injection, a serious capital injection into that company, or a merger. In terms of solvency of that company as well, technically struggling, basically staying afloat now because of funding bank loans. That's basically what's sustaining them. Still has a very solid brand, Tantalizer. Everybody still knows Tantalizers very well. They have been competition in the QSR business, and so that is also taking a toll on that company. So you do want to pay attention to what's going to go on with Tantalizers over the next few months and years. So we go into Oando. Oando's stock is up 60% in 1 week. I didn't mention that earlier. So what's been the reason? Like, everybody was asking, where did Oando come from? Oando is all of a sudden just, Oando used to be like below 10 naira per share, and now Oando is trading at $40 per share. That's just crazy. So the share price has rallied 200% in this quarter alone, like in a little over 3 months. 300% at 14 naira. So it's been an amazing story for a company that has gone through different trials and tribulations, I can use that word, since that ConocoPhillips deal in 2014. But it looks like there's a resurgence going on here at Oando. And a lot of the major drivers, of course, the results that they released their 2022 and 2023 results back in May. The results were delayed for a long time, especially when they faced a lot of legal related issues, but they seem to have cleared that path now. And then more importantly, the potential completion of the acquisition of the Ajib upstream assets as well has also propelled the stocks, the share price to this kind of sort of level that it is at the moment. So it looks like investors see a lot of positive tailwinds going on for Oando. I do suspect that there might be some kind of investment or acquisition or some sort of deal going on behind the scenes around Oando. That is probably what is exciting shareholders. A lot of those details are not out yet, but I suspect that's probably one of the major reasons. But interesting, the sort of share price performance that we've seen Oando do over the last few months. I don't know how far this share price can go, because people are asking me, do I still buy? Look, man, I don't know. I think at this sort of levels, you might want to just slow down a little bit because I don't know what else is above the sort of 200% return that they've done. We've seen share prices go up 1,000% in this market, but if you're in it for the short term, maybe you just want to go in there and see if you want to make some money. maybe you will try your luck, but you got to be careful out there. But good stuff for Oando shareholders, especially those who have stayed with them over the years. It's been tough period for them, but I'm sure a lot of them are happy now that the share price is climbing gradually. For those who probably went in earlier, man, you guys are smiling to the bank right now. I know, right? Okay, so stocks to watch this week. Oando, of course, one of those stocks I said I wanted to watch. UAC as well on my radar as one of the stocks to watch this week. Of course, Access Holdings is also one stock I'm going to watch it this week. Why am I watching it this week? I think that Access Holdings might be releasing their results this week, so it'll be interesting to see what they come up with in terms of their numbers. Their public offer is their right issue, I beg your pardon, is currently running at the moment. So if you haven't bought, perhaps you want to look into Access Holdings right issue. And of course, I'm also looking at Fidelity Bank. Fidelity Bank right issue ends today. So you have it today to buy it if you want to buy Fidelity Bank right issue. Ends today. From what I'm hearing that right issue, public offer of Fidelity Bank. What's wrong with me today? Fidelity Bank's public offer might have been oversubscribed. That's what the feelers we're getting from insiders at Fidelity Bank. So exciting times for them. Looks like they've been able to raise about 170 or 180 billion or so in their public offer. Next in line for Fidelity Bank is their private placement. If everything goes well for this bank, you might want to watch this bank. It's looking like it's likely going to be the next in line to get into that tier 1 space that has been dominated by the Fugas. So I wonder what's going to be now. It's going to be FF Fugas. Of course, well, I'm also expecting to see results from the likes of GT, UBA, and Zenith Bank. Of course, UBA, GT, and Zenith have also been on our radar for a bit. GTCO's public offer is currently ongoing as well. That's another stock on our radar, so you might want to look at that if you haven't gotten it yet. GT, solid company, always paying dividend. UBA as well might also be launching theirs pretty soon, so it's been on our radar. I've been tracking that stock for a while. It's one of those stocks that I think should make some good money for investors this year, so you might want to look at it. UBA. And of course, Zenith also has their public offer ongoing. Feelers I get is that things seem to be going quite smoothly with their public offer at the moment. So interesting period, interesting times for investors. I'm sure you've seen a lot of barrage of calls from your account officers or your investment managers or your portfolio managers telling you to buy shares in some of these companies. Most of them have very solid numbers. These are very profitable companies. The difference between this time public offer this time around and several years ago, of course, is that a lot of the banking stocks are highly undervalued. Look, I'm saying that. I know what I'm saying. They're highly undervalued. Most of them are trading at less than 3 times their earnings. That is pretty cheap for a banking stock. So you would see that. And these guys consistently pay dividends. So that means dividend yield down the line would always grow. Based on, the sort of purchases that you have. But of course, you can also buy some of these shares on the market if you want to buy it on the market. That's why they're trading side by side. But the advantage of buying a public offer is that you don't get to pay a lot of the fees that you pay if you're buying right on the market. So that's what you kind of check. All right, so that basically has been Follow the Money for the week. Which of the stocks do you like? The ones that I've mentioned at the moment, which one caught your attention? People have also told me to talk about foreign stocks. So I guess at some point in this show, we're going to be talking about, foreign stocks, likes of Netflix, Facebook, or they call themselves Meta now, Apple, Netflix. Which ones do you want to buy? Even Nvidia. There are a lot of foreign stocks out there that you can make solid investment returns from. And so I'll be bringing them into the show once in a while. That is my show for the week. Follow the Money, brought to you by Nairametrics. My name is Ugodre. Of course, you can listen to the show every Monday, 8 to 8:30 on Classic FM 97.3. And of course, we have recorded versions across all podcast platforms. Just go to your podcast platform and search for Nairametrics, Follow the Money, and just bookmark it. And you can always listen to it. Of course, there's always extended version on YouTube as well. On Nairametrics YouTube channel, you see our Follow the Money podcast and my money brief. My latest money brief was the connection between interest rates and substandard and fake products. There's a huge connection, in case you don't know. High interest rates and fake and substandard products. You want to listen to that. This is me signing off. Do have a profitable week ahead. Goodbye.